I've created this video to help you to understand how the tax you pay on your pension income is calculated. Income payments for pensions are subject to income tax, but not national insurance. They are taxed under the pay-as-you-earn regime in the same way as employment income. If you are taking income from your pension each month, the tax paid will be deducted monthly. HMRC issues a tax code that is used by the pension provider to calculate the amount of tax deducted from your pension payment. If the pension provider has the wrong tax code, you could end up paying too much or too little tax. So what happens when you start taking an income from your personal pension? When you start withdrawing money from your pension, either under Flexi Access Drawdown or UFPLS, that stands for the Uncrystallised Funds Pension Lump Sum, your pension provider will not know your correct tax code. They will use the month one basis. The month one basis does not take into account any other income that you have or will receive in the tax year. The month one basis means that your income or lump sum can only use 1/12 of the annual personal allowance and 1/12 of each tax band. Let me explain with an example. Let's assume you withdraw a taxable amount of £5,000 from your pension. Remember, your pension provider won't take into account what other income you have when this first payment is made or when in the year it is paid. The gross income payment will be £5,000. We then need to minus the 1/12 of the tax-free annual personal allowance, which is £1,048. This leaves £3,952 taxable income. The total tax paid on this income payment is broken down into two parts. £3,142 is then taxed at 20%, which is £628, and £810 is taxed at 40%, which is £324, making the total tax payable £952. Deducting the total tax from the taxable income would leave you with £4,048 as your net income. If you were going to take £5,000 each and every month, had a full personal allowance available, and you started to take your pension beginning of the tax year in April, then this tax deduction would be correct. That's because HMRC will give your pension provider the correct tax code after the first payment. So they will adjust the tax taken for the rest of the year. Put another way, when it comes to taking ongoing regular income from your personal pension, even though the initial tax deduction may be incorrect, as with PAYE, on a salary, it should sort itself out within the tax year. However, if this was a one-off £5,000 withdrawal from your pension, you would have overpaid tax by £952, which you could claim back. Now, you don't need to wait until the end of the tax year to do this. Now, I'm sure you are wanting to know how you claim tax back if you have overpaid. If you don't take regular income, then it may be worthwhile reclaiming the extra tax paid during the tax year. So, to reclaim tax within the same tax year, you need Form P55 to reclaim an overpayment of tax when you have flexibly accessed your pension. You need Form P53 to reclaim an overpayment of a tax on a trivial commutation lump sum or small pension pot taken as a lump sum. You need Form P50Z to reclaim an overpayment of tax when you have flexibly accessed all of your pension pot and you have also ceased to work or claim benefits. Form P53Z to reclaim an overpayment of tax you have flexibly accessed all of your pension pot. Check out the video description for links to these forms. Now, if you decide not to complete one of these forms, HMRC will reconcile the tax paid at the end of the tax year and will provide a refund or amended tax code for the following tax year. This is the least hassle, but will mean a significant delay in you getting a refund. Thanks for checking out my YouTube channel. I'm Justin King, and my aim is to help people live successful lives. And that often involves understanding your money. If you've enjoyed this video, please press the like button to help more people like you find my channel, and check out the show notes for some useful links on things I've discussed in this video. For now, I'm Justin King, helping you live your best life.